just from a big picture perspective. Today we've got indices continuing to push higher. S&P 500 tapping into that all-time high. NASDAQ, same thing. Dow Jones pushing higher here as well, and the Russell doing quite well. Gold is lower here today. We'll talk about that. Dollar index also lower as well. Oil prices going sideways here. And we've got Bitcoin kind of chopping back and forth as well. As we get started in the stream, if you guys could do me a big favor and just hit that thumbs up button, and also comment in the chat here. Let us know in the chat room what you are most interested in getting access to here in terms of live stream coverage. Are you looking to look at Euro dollar, gold, NASDAQ? Drop it in the chat what you'd like me to pull up, and I'll be doing a bit of a round the world on charts here this morning. Gold is probably one of the most interesting ones here today. I do want to just kind of take a look at this S&P quickly. We have prices heading through those all-time highs as we speak, continuing to push higher. And a lot of the woes and worries that the market has had seem to have been put to the side. We got stock market moving back to the all-time highs. Usually that coincides with expectations of better things ahead kind of thing. When the market was trending lower, the idea was the uncertainty around tariffs and all those things still exist, right? We've talked a lot about that, about how the market got over terrified and everybody sold, and that was a great opportunity to kind of actually buy against the crowd. Well, now that we're at the all-time highs, I'd actually love to look at the sentiment update for this week. We get this every Wednesday. So let's just take a look at this. So we're going to go to market sentiment here, AAII Investor Sentiment Survey. Awesome. We got requests for gold, gold and Bitcoin, gold, Dow, NASDAQ, Bitcoin, Euro dollar, Aussie dollar, everything except stocks. Fair. I have a channel that's dedicated just to stocks. So if you want stocks, go to Trader Nick Stocks. But we'll look at indices, commodities, currencies as usual. Okay, so the AAII Investor Sentiment Survey here put out the latest reported numbers here, still more bearish than bullish. And that has been the case for the most of 2025. Most of 2025, people have been definitely more on the pessimistic side of markets. We do see the bearish tone of the room still very, very much thinking that the markets are going to have some sort of big downside move. That's been the case for most of this year. And most of this year, there was a period where this negative sentiment was correct and the markets were trending lower. But what's interesting is that once you had that April bottom, people got like the most bearish right at the bottom and have stubbornly stayed heavily bearish on the market since then. So with the stock market at all-time highs, like, here's the thing, right? If I'm ever bearish on the indices or just risk sentiment in general, if I'm looking at Bitcoin, if I'm looking at risk on assets and they are breaking to all-time highs, to me, that's something where I can't really justify holding a short position, because these things typically go up over the longer term, right? So if you're going up over the longer term on the S&P 500 and the NASDAQ, and what was this kind of downtrend that started completely failed out, at some point the logical thing to do is to say, okay, maybe I was wrong. And so, does that mean that we have to just kind of skyrocket into the sunset from here? No, but the thesis, if you were a bear on the tariff worries, the thesis has mostly evaporated. Because now if you're saying, no, that's going to happen again, you're betting that relations with China are going to go back into the massive extremes that only stuck around for like a matter of hours, right? That's what was so terrifying to the markets, was the 145% tariffs, which lasted very briefly before Trump essentially announced that the 90-day pause and negotiations began and all that sort of stuff. So to me, it's like, okay, that's a tough one to call. So if I'm looking at the indices, I still think we have upside. I've been long. I bought stocks over here, bought stocks over here, bought stocks over here, got long the Russell around here.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So when it comes to the Russell here, my goal is to, like I said, trail stops below this structure here. We broke nicely above this 2120 level. Kind of broken, retested, and then kept going here. So yeah, I'd like to, if the trade's going to reverse from here, I would, or if it's going to pull back from here, that's fine, but I'd like to see it hold this area where we put in this really nice candle. If we drop it down to like the 4-hour chart, you can kind of see what took place there. You had this, here's the big resistance point. We retested that area. Sellers came in, but then they immediately got hit with, the bulls got strong right there. So I pretty much want to lock in something behind that level. And if we trail out, then I'll just look for another entry and take profits on it and run it back again, kind of thing. What type of trading is that? And what's the app name? I'm using TradingView.com to chart my setups. And it's a trailing stop approach with fundamental analysis as the primary driver. That's what I trade. Okay, so we have PCE numbers this morning. Let's just take a look at how that fell and see if it moved anything. Dollar index, a little bit of a downside here move. PCE came in slightly higher than expected. Month over month was 0.2% compared to the forecasted 0.1%. Gold moving a little bit lower on that number. Silver, not a big move in response to it. Bitcoin's moving a little bit. Stocks, here's your 1-hour chart. Yeah, nothing major, at least in response initially here. Did you go long gold, Nick? No, I didn't. Did not take a gold long. I'm feeling glad that I didn't. Look at gold's been dropping here this morning. Let's take a look at gold. I'm sure a lot of people are wondering about what's happening here. So if I do take a trade on gold, I'll share this inside of the Discord. I'm watching it myself. It's possible gold could reach 3250 today. 3250 is right around here. That low of this candle, I'm imagining, is what you're seeing. Yeah, we very well could. Yeah, I'm gonna watch it. If I take a trade, I'll notify you guys. But I do like gold from a possible kind of like adding it as a hedge in my portfolio sort of thing, because I'm really long stocks and indices right now. So stocks and indices are doing great, but I don't mind the idea if I can find a good sort of hedge to the portfolio, if you will, which gold could act that way. I thought, to be fair, I tried that with oil, did not work out well, stopped out on that one, but, and silver, I also stopped out on silver. But gold may be another attempt for me. So we'll see. A little bit of resistance here overhead that has really held nicely. But to be fair to the bulls have also been able to hold, this general area very, very well. So if we do see kind of another flush lower, here's the thing: gold is sitting right on the cusp of this upward trend line here. Level of resistance, level of support, that 3,300 level. I do think it has upside, but I've been really not in a rush to take this trade. I have a really full set of positions in my portfolio right now. I have very little margin available in my account, or cash. I predominantly trade my portfolio with minimal margin used, but I do have very little available. So I would look at a gold position today. If I take that trade, like I said, I'll notify it in the group. nice overall upward trend. I am bearish on the dollar, so it does fit my criteria for a possible trade. Dollar's also breaking support here. Check this out. Dollar index underneath the 98 level of support that had held so strong. Really impressive move lower here. The bears are just not getting tired on dollar. It's pretty impressive. Look at how consistent this year you've just had lower highs on this chart. Really, really impressive. Let's also take a look really quick at yields this morning. Yields have been trending lower. Probabilities for rate cuts have been increasing. While you have Powell, Powell being a bit hawkish seems to be proving him right for the wait and see. We'll see. I mean, the thing is, while Powell is, the chairman and he's a little bit more on the wait and see side, we've seen like a huge rise in the rest of his, the committee, right? And it's definitely not the majority, but a lot more Fed members are like, hey, actually July is potentially live, meaning we could cut in July. And I've been pretty vocal on the channel here recently that I do think rate cuts are appropriate. Did you guys see the GDP number, right? The Fed themselves actually lowered their guidance or expectation, right? Their forecast for GDP. If we take a look at the U.S. economic heat map, this was a big miss yesterday in GDP stats. We missed by 0.3% on the GDP number. We also have PMIs that have been really poor compared to expectations. Both PMIs for manufacturing and services are in contraction. ADP was pretty rough this month. NFP kind of just barely met expectations. So to me, it's like, okay, you look at this and you say, yeah, the U.S. economic data is materially weakening. So if I look at this and I say, okay, is it appropriate to cut rates? Well, then the pushback would be, well, what about inflation? But look at inflation. We've had 1, 2, 3, 4 in a row, 4 CPI reports that came in softer than expected. When it comes to the CPI report coming in soft 4 times in a row compared to expectations, U.S. economy showing some evidence of it's not, you have to understand the U.S. economy is not like showing signs of dying, right? It's just showing signs of slowing down. And so if it's kind of like going from a sprint to a jog, right? Or even a walk, right? So we don't want to, the thing is, if you risk not cutting rates for too long, you could go from a jog to a straight up kind of like falling over, right? And you don't want that. So the idea, the prospect of lowering interest rates doesn't necessarily mean you have to cut by, you don't have to cut interest rates to zero. But I think a lot of Fed members are suggesting, okay, we could probably cut rates by a little bit here because a lot of people are still feeling those huge impacts of inflation that we saw in the 2021, post-pandemic, all the pandemic stuff. We saw a global surge in inflation. People are still feeling that. And so, there is this idea that the housing world could use some help. The consumer has held up pretty well, but we're going on multiple years of higher than usual interest rates, at least in the last, decade or so. And we have high interest rates relative to inflation. Inflation's come down a lot. So, to me, and I think that a rate cut is, getting rate cuts started again is a process that I think is likely to, become more and more common in terms of the eyes of the Fed. That's why I'm long, the Russell specifically, is I think that the Russell disproportionately loves rate cuts to the other ones. And so if there is like, okay, rate cuts are coming in maybe not in July, but if we get 3 cuts this year or something, I think that the Russell will do really well. Dollar index, like I said, back down almost to yesterday's lows. Gold is threatening this level of support right now. Down 1.6% today. Gold is making a move. Silver as well, down 1.87% here today. Bitcoin's flat on the day. What are oil prices doing? Oil prices have really calmed down. We went from moving like 5+% per day to we've been in a range the last few days. Here's a look at the euro. The euro is just on fire here, guys. I don't know if you've been watching the euro, but my goodness, this thing is ripping higher. Pound dollar, same thing. Really, really strong right now. Dollar yen looks choppy here. Dollar Swiss franc, look at that, trending through those lows. The Swiss franc has been such a beast in the last few years. Swiss franc against most currency pairs is like the strongest. Dollar CAD here, still trending lower. The Australian dollar here, back towards those highs. The Kiwi dollar here, back towards its highs as well. Euro yen is just a monster. I was talking with Miko yesterday he was on the show, about euro yen. Look how strong this thing is. If this were to give a pullback, that would look really interesting to me. Euro yen at support here, but that's a ways away. So that's kind of a bigger, longer term idea, but we'll see if that comes back in. Pound yen, big breakout here on the daily chart. Now testing up against this 199 level of resistance. CAD yen broke this resistance point, now just sitting at support. We'll see how it behaves here. Aussie yen, downtrend, but then kind of has been in the process of potentially reversing. If you take a look at like the Australian dollar against the Japanese yen, supply level 95, that could be a pretty key breakout point if it were to break higher from here. Kiwi yen, I took profits on this one earlier this week. I had a long trade that went pretty decently well. It wasn't a huge winner for me, and I sat on it for a while because it just chopped sideways, but I did end up taking like 106 pips on this pair. Can you talk more about the euro? Yeah, I mean, for me, if we take a look at the euro, for example, the EU economic heat map here has tilted more back into the negative side of things, specifically PMIs. PMIs this week, right? So manufacturing PMIs came in soft and as expected. Unemployment rate came in as expected at 6.2%. Producer price index was better than expected, came down. CPI came in as expected. Retail sales came in soft. Yeah, I'm kind of neutral on the euro right now. Closed my euro dollar trade. 10 minutes later, I saw on Discord that she closed it too. That's awesome. Nice, Bulent. Very nice. Yeah, I took profits on the euro move that I was in. In terms of setups now, I mentioned I would talk about the euro pound. So I do have a euro pound short trade. Actually, I have two trades open on euro pound. This trade's in drawdown. I went short here and I went short here. And I would be willing to add to the short position at around 86 or at around 87. So if we get a move higher from here, I will continue to hold this short and add to this short and potentially add to this short. Now, some people really don't like dollar cost averaging, and I understand why. A lot of people have like a really bad experience doing dollar cost averaging because they did it in the past and they approached it in a really, there is a way to be methodical with it so that it's not just, you're just blindly adding to losers and doubling and tripling with tears in your eyes until your account blows up. That's what people think dollar cost averaging is, when it not at all is that. Currencies, what I like about them is that they chop a lot. Like, as weird as that may sound, I actually like that currencies do this, because especially a currency pair like euro pound, which actually doesn't move a whole lot. Like this giant move on the daily chart, that was 400 pips, which is a lot of pips in terms of just like if you were day trading. But as a swing trader, you know, to think like this giant move from October of 2022 all the way to the lows of 2025, that move was 1,000 pips. Now, the reason I like a pair like like Euro Pound is because it doesn't move all that much. And so that gives me plenty of wiggle room to take small size and to short this currency pair. Let's say I have this sort of campaign approach with a lot of what I do in my trading. So if I think that the Euro Pound is ultimately likely to move lower, right? If that's my thought, then I don't mind taking a little bit of a trade here, a little bit of a short here. And if it moves in my favor, then I'll look to close out and possibly start again. And if it moves higher against me, I'll trade it again. Now, the key in all of this is all that sounds good unless you're sizing inappropriately. If you take a huge short here and a huge short here, you can't stomach the idea of this thing moving higher. You think, wait, if it goes higher, I'm going to blow my account. If you're too far gone, if that's the way your sizing is, then the story has been lost, right? So the idea is if I'm thinking Euro Pound will move lower, I'm saying I'm not necessarily thinking it's moving lower in this next 30 seconds. I'm saying, okay, big picture, longer term, I think it'll move lower. So I'll take a little short position here, take a little short position here. And if the market rolls over, I'll take profits. And if the market moves higher, I'll build that trade into the size that I want it to be. It's a different style and it's not for everybody, but it's something that's worked really well for me and I've done it for many years and it fits my style very well. So Euro Pound, I have two short positions open. Here's another one that I'm sitting in some drawdown in. CAD Swiss, back down to the lows here. I have two trades open on CAD Swiss. And I'm thinking about adding another one, but I don't know if I want to trade CAD Swiss or if I want to build my CAD basket. So I'm bullish on the CAD, right? So if I'm taking a look at the Canadian dollar, right now I like the idea of building more long exposure. I have very little long exposure to the Canadian dollar. I have a couple small trades. I want to build my long exposure to the Canadian dollar. So how do I want to do that? Well, I have choices. And so what I want to do is I typically want to take the Canadian dollar, which I am pretty bullish on, and I want to buy it against something that I'm pretty bearish on. So I might actually look to trade Euro CAD, short Euro buy CAD. Or maybe I want to do dollar CAD, which I'm a little bit softer on the dollar and more bullish on the CAD. Or I could do Aussie CAD. I already have a trade on Aussie CAD, and I already have a trade on CAD Swiss. So what I can do here, and I love this about currencies, is I can build a basket. So what I can do is I can say, okay, if I'm bullish on the CAD, I can sell the Swiss franc by the CAD. I can sell the Aussie dollar by the CAD. I can sell the euro by the CAD, and I can sell the dollar by the CAD. Do you see what I just did there? Is this making sense? What I'm doing is I'm saying I'm bullish on the Canadian dollar, and some of these other currencies I'm not as interested, or I even think that they could go lower. So I'm building what is called a basket, where I prefer the CAD and I sell things against it. Does this make sense? I want to make sure that this concept of a basket makes sense. I'm not saying I'm going all in Canadian dollars with, a 5.0 lot size. That's not what I'm saying at all. I'm taking really tiny positions and I'm building them across the currency market. It's a bit of it's almost like trading with a portfolio or it's position trading, right? So this is what position trading is. And it's my bread and butter when it comes to Forex. So I hope that makes sense, but that is how I'm approaching, or how I trade Forex in general, is more of a basket approach / a carry trade approach, a little bit more longer term in nature, but not always. I've been taking some really quick profits too. Like I traded the euro dollar, took profits on this move. I went long right here, closed it out here. Obviously I shoulda, coulda, woulda held it longer, but a profit's a profit, and I move back in when I can get the right setup again. So that's the game plan with Euro, Pound, CAD, Swiss. I'm building out my baskets and willing to keep doing that because, again, I have very small size as it is. And we'll see what happens next. It's interesting. Dollar is lower alongside gold. That can sometimes be really confusing to people. That could be pretty confusing to people. It's like, why can the dollar be going down with gold? But remember, they're not the same asset, right? The dollar and gold can move independently at times. So for example, the dollar and gold can move up at the same time. One of the easiest examples to give of that timing is when there's like geopolitical uncertainty, people typically want to get out of risky assets and they want to move into safe stuff. What is quote unquote safe stuff? Nothing is actually safe in markets, but perceived security is in gold and in the US dollar. So there are times where they can both move up, or there are times like right now where the opposite is true, where people feel way more risk on and they say, sell the dollar, let's get into stocks, sell gold, let's get into stocks, let's get into crypto, let's get into, higher risk stuff. So I think a little bit of that is happening right now because you've got gold, breaking down below a support level. Gold's like, the reason I'm not rushing to buy gold, like crazy is because, again, the technicals they're pretty choppy. We had this really clean move in the beginning of the year that has really turned into a chop fest. We've just had back and forth. And if you've struggled to trade gold in the last few weeks or months, I do not blame you. There's a lot of people who love trading gold and that's like their primary thing. If you enjoyed trading gold in the first half of the year, actually, we could do a couple things here. If you're a trend follower that trades gold, actually, can I ask the audience just to weigh in on this? If you're a gold trader, have you been doing good with gold recently? Has it been tough? Let me know in the chat. I'm just curious to the gold traders. Have things been difficult for you too? Or are things, good recently? I guess it also depends your timeline. If you're somebody who trades like the 4-hour chart, we've had a nice downtrend or an uptrend here. If you're like on the hourly chart, still pretty choppy over here. Yeah, okay. So I'm not crazy. Only use gold as a hedge, about the same. Indices look better. It's going good for me. It's been like Texas Hold'em. Horrible. Yeah, I mean, so I'm going to tell you this because I've traded gold as one of the primary things that I've traded for like 6 years or 7 years. And in the time that I've traded gold, that is just how it goes. There are times, the last few years have been phenomenal for me in gold. Like gold has been a primary contributor to my personal P&L in 2023, 2024, 2025. However, you got to understand everything goes in and out of season, just like everything goes in and out of style in the markets. Stuff goes in and out of style too. Right now, the cool thing to do is buy gold. That's the cool thing. And it's worked really well. You're listening to somebody who's been very much on the bullish side and have done well doing gold, and I still am bullish on gold. However, there are also times where gold is just an absolute menace to trade, where it fakes you out and it just goes down and up and down and up and up and down and down and up. Everything kind of has its season. Sometimes it's good, sometimes it's bad. Gold may be entering into a period where, okay, the pre-Trump era was really good for gold, and even in the onset of Trump's era. And this is actually seasonally holding up really well to what expectations were. Let me explain. Uncertainty is really high. I know obviously Trump is a very polarizing figure, But in general, there's been all sorts of studies. I'd encourage you to go pull some of these up. They're very interesting. Typically, the way like the seasonality around a switch in administration works is there's a lot of, sort of optimism initially, or some excitement about like some good changes. The good kind of runs to the front. And that's what we saw in, the initial announcement. We saw a very strong push higher in risk on assets on the November 5th election day. We saw stocks run up initially. And then as sort of the dust settles on the hype, right? The hype runs ahead. And then what happens? We're looking at the election or the playbook, right? This is seasonally observable. So again, I'd encourage you to look this up. Excitement about the new administration in general, doesn't matter if it's red or blue. And then in the onset of an administration, in the first year, especially the first half of the first year of a new president, the new changes can scare the markets. And in fact, I think the seasonality chart, if you look at it like across all the different presidents over like the last, I don't know how many years, it looks something like this. Off the top of my head, it's like choppy at first, and then in the second half, it starts to smoothen out in terms of average performance. You get the midterms, which are sort of, choppy again. And then at the end of a series, like this is the 4-year cycle of a presidential administration, right? You get choppy, then you get excitement, then you get choppy, then you get excitement. That's the seasonality of the 4-year US presidential administration stuff. So where are we on this chart? Right here. Like we all think like, oh, this is new, we've never experienced something like this before. But it's amazing how repeatable like human psychology stuff is. And I do think that we are likely to enter into a period of a little bit more normalcy. You know who else thinks that? Do you know who else thinks what I think?
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.